Why this Dubai project failed, hard truth no one talks about. This Dubai real estate project had luxury renders, flexible payment plans, and massive hype. It was marketed as a perfect investment opportunity. But today, many investors are still stuck, unable to sell, unable to refinance, and unable to move their money. In this video, we're breaking down why a Dubai project failed. Not to blame anyone, not to name any developer or broker. This is an educational case study focused on patterns, so you don't repeat the same mistake. The hype phase. At launch, everything looked perfect. Buyers were told the project was in a prime location. They were promised high returns, strong appreciation, and limited availability. Early investors were told they had an advantage, and urgency was created from day one. Marketing was aggressive. Luxury visuals showed a premium lifestyle, modern amenities, and future growth. Brokers spoke with confidence, and buyers rushed in because nobody wanted to miss the opportunity. On paper, it looked like a safe bet, but strong marketing often hides weak fundamentals, and that's where the real problem began. The real problem: wrong location logic. The location itself was not bad, but it was wrong for the type of buyer being targeted. This project was sold as an investment, yet the area did not support strong end-user demand. It was too far for daily commuters, rental demand was weak, and the surrounding infrastructure was not ready at launch. There were limited schools, limited retail, and no established community living nearby. The project depended heavily on future growth, not current demand. And here's the hard truth many investors ignore. A good location without demand is still a bad investment. Payment plan trap, attractive, sustainable. One of the biggest reasons buyers entered this project was the payment plan. Low booking amounts, long post-handover installments, easy monthly payments. It felt affordable, but affordability was artificial. Payment plans don't reduce the price, they delay reality. The total cost remained high compared to actual market value. When handover approached, many buyers realized rental income couldn't cover payments. Banks began valuing units lower than expected. Mortgage approvals became difficult, and suddenly the easy payment plan turned into long-term pressure. Attractive does not always mean sustainable. Developer execution, promises versus reality. In Dubai, real estate execution matters more than promises. This project did not fail at launch. It failed during execution. Construction slowed down. Timelines were extended. Some quality compromises became visible over time. Delays affect more than completion dates. They reduce investor confidence, weaken resale demand, and increase holding costs. In Dubai, projects rarely fail on paper. They fail when execution doesn't match expectations. Exit failure, the real trap. The biggest issue appeared when investors tried to exit. Resale demand was weak comparable. Prices were lower than expected. Banks undervalued the units, leading to mortgage rejections. Without financing support and without end-user demand, the secondary market disappeared. And this is the line every investor must remember. If you can't exit before handover, you're already trapped. This is where professional investors separate themselves from amateurs. What smart investors should have checked. This situation could have been avoided. Smart investors always check 5 fundamentals. They analyze real rental demand, not projections. They compare resale prices, not launch prices. They study the developer's delivery history. They confirm mortgage eligibility early. And most importantly, they plan their exit before buying. Every bad investment teaches the same lesson, just too late. This project did not fail because of bad luck. It failed because buyers trusted marketing over fundamentals. Dubai real estate rewards patience, research, and discipline, not hype. If you want honest Dubai property analysis, not sales talk, subscribe to APL Properties. We focus on education, case studies, and real investment logic, so you invest with clarity, not regret.